Loan forbearance, is it right for you? I'm going to share with you important information you should know to help you decide if loan forbearance is right for you. It's all coming up. Stay tuned. Hi, I'm Warren Oberholser with RE/MAX Accord. I'm located in the East Bay Tri-Valley area in Northern California. My channel is about helping both buyers and sellers get maximum results for one of their biggest investments, their home. I want to begin by saying I hope you, your family members, and friends are all well. And if somebody is sick, I wish them a fast and complete recovery. We're now 6 weeks into shelter-in-place orders. Unemployment has exceeded 26 million claims, and we're at a 16% jobless rate. As you can imagine, this has stressed our economy and particularly housing. For this reason, the federal government passed the CARES Act. Now, this is a relief package worth over $2 trillion that's designed to provide fast and direct financial relief to the American worker, families, and the small businesses all affected by COVID-19. Part of the CARES Act is to allow a homeowner with a mortgage to temporarily suspend their payment if they're experiencing financial difficulty due to the impact of the coronavirus. This suspension or reduction of payment is referred to as loan forbearance. So what is a loan forbearance? This occurs when a lender allows a homeowner to make reduced payments or no payment for a set period of time. Your loan continues to gain interest during this period. The skip payments are then due at the end of the designated timeline. All principal and interest money not paid during loan forbearance is still owed to your lender and is not reduced or eliminated from your loan balance. So if you're one of the millions who's been financially impacted by COVID-19, you may be considering a loan forbearance. I'm going to share with you some important information you should understand before going into a loan forbearance arrangement with your loan servicer. And please stick around to the end because I'm going to give you my personal assessment and discussion on loan forbearance, so hopefully it'll help you decide if loan forbearance is right for you. Number 1. The CARES Act guideline for federally backed loans. If a person is financially affected by COVID-19, they can request a forbearance up to 180 days. You also have the right to request an extension for an additional 180 days. To do this, you must contact your loan servicer to request a forbearance. No penalties, fees, or additional interest is added to your loan. Interest will still accrue. No documentation is required to qualify. Number 2, questions to ask your lender. Can the forbearance term be extended after the 360 days have concluded? If you have an impound account to cover your property taxes and insurance, inquire how they'll be handled during the forbearance period. It is essential you request from your loan servicer how you'll pay back the money owed after the forbearance period has ended. Here are some examples of possible loan repayment options. Of course, I have no idea what your lender will offer. Balloon payment, you pay upfront all missed interest and principal at one time. Repayment plan. This would be an additional payment plan for missed principal and interest on top of your regular mortgage payments. Loan modification. They take all the missed principal and interest and they put them into your loan. They may extend the time frame for your loan. So if you are considering a loan modification, you should inquire up front if you have to go through a new loan application and approval process once the forbearance period has concluded. If so, what are the qualification parameters? This include new credit score, job verification, etc. One last point on loan modification. The CARES Act only applies to federally backed loans. To qualify for a loan forbearance, you do not need to show any upfront proof that you've been financially impacted by COVID-19. However, it is unclear if you need to show proof of being financially affected if you apply for loan modification once your forbearance period has concluded. Therefore, this is another question you need to ask your lender. And if the answer is yes, inquire what kind of documentation is needed. Per the CARES Act, and again, this is just for federally backed loans, loan service providers are not to report any late charges to the credit bureau during forbearance period. However, it is still unclear if your credit can be impacted by forbearance. Therefore, you should inquire from your service provider, can my credit score be affected if I'm in forbearance? Number 3, non-federally backed loans. As mentioned, the CARES Act forbearance only applies to federally backed mortgages such as FHA, VA, USDA, Fannie Mae, and Freddie Mac. If your loan is non-governmental backed or private loan servicer, you may or may not have any forbearance options. For this reason, you'll need to contact your lender to inquire if any are available. Number 4, document your conversations. Create a spreadsheet, Word doc, or a journal to document every time you speak to your loan service provider. You'll want to note things such as date, time, who you spoke to, and most important, what was discussed in the conversation. I would also request if you can record the call. Why not? They always record our calls by saying it's for training purposes or something. If possible, ask them to email a summary of what your conversation was about. If you communicate with some kind of chat service, make sure you save the screen dialogue with some kind of screen capture method and save those in a file. The point is, when it comes time for loan repayment, if the bank is not offering you what they first discussed, you may have some recourse by noting your prior communications with them. It always helps when you have notes and especially written documentation. Number 5, advice. Before you enter into loan forbearance, you should reach out to anyone you know who has a background in lending that you trust. You may also want to contact an attorney who is familiar with the lending laws in your area and see what they would advise. Thanks so much for sticking around to the end for my assessment, discussion, and advice on loan forbearance. There's a couple of things I recommend you do up front before you even begin into a conversation with your loan servicer, and especially before you sign something, which is get advice from an expert. As I mentioned earlier, if you know a good loan agent or mortgage consultant, I would contact them first. If you do not have anybody, you might want to reach out to Brian Labarge from Vintage Home Loans in Pleasanton. Brian's been in the business over 20 years, and he specializes in residential mortgages and is quite knowledgeable with our current lending situations. You may also want to contact an attorney, a CPA, or anyone who specializes in finances. My next recommendation, if you do go into loan forbearance, make sure you have an exit plan. In other words, how will you pay it off? Again, all deferred principal and interest must be paid back to the lender. If it's unclear if a loan modification or repayment plan will be available to you, then I would just plan on a balloon payment. So to best prepare for this, while you're in forbearance, economize as much as possible. Set aside money every month so you can be prepared to pay back. One last thing, due to the fluid nature of COVID-19 and our economy, it's incumbent upon each person to stay abreast of changes and updates with the CARES Act. Please visit the Consumer Financial Protection Bureau. Their link is provided below. If you liked this video and you found it helpful, please click the like button, subscribe, and post any comments or questions you have below. And stay tuned. I have more helpful videos like this coming soon. Thank you so much for watching.